Drive Research surveyed 1,000 US consumers to learn about their banking habits and preferences. As a research manager, here are 5 key findings that I found most impactful. Number 1, while banks remain the most common financial institution used by consumers, 83% in our study, we also saw that over 2 in 5 Americans now use a non-traditional digital banking provider. So what does this mean for financial institution decision makers? It ultimately means that the competitive landscape is now expanding. Online-only providers are becoming more commonplace, where physical banks and credit unions once dominated. Innovation will be crucial for these traditional financial institutions to really attract the attention of these younger consumers who are on the rise. Number 2, inflation is the number one financial stressor for consumers, with 59% saying that rising prices are straining their finances. So for financial institutions, they need to understand that consumers are still concerned about economic strains in their daily lives right now. These institutions may need to cater their offerings and messaging to the sensitivities for consumers. Consider cost saving and flexible payment programs potentially to help resonate with consumers to combat the high cost of living. Another option is financial education and guidance to help build trust in the face of these inflation anxieties. Number 3, 34% of consumers use a mobile banking app daily. So for financial institution decision makers, this really means that mobile capabilities are now an essential part of the banking experience for consumers. High daily usage like this means that it is critical to minimize app downtime, as well as offer generous features to meet consumer needs on mobile. It will also be very important to consider the consumer whose only interactions with the financial institution are through the mobile app. So you have to ask yourself, does our mobile app provide a comprehensive experience for banking? Number 4, Gen Z relies on social media more than banking representatives for financial advice. There will always be a need for financial advice. The trusted sources just seem to be shifting for the younger generations. A presence on social media will be key for most financial institutions among their target audience. A financial institution could consider partnerships or sponsorships with content creators on social media to help get their brand more in front of Gen Z. Equally important here is monitoring social media platforms for brand sentiment and mentions. Catching potential issues before they dominate public perceptions can help protect the financial institution's reputation. Over 1/3 of US adults didn't write a single check in the last year, and that share even jumps up to 46% among Gen Z. So we see that checks are becoming more rare as digital means of money transfer are becoming the standard. Transfer apps like Venmo, PayPal, and Zelle have changed the game for peer-to-peer transactions. So if you're a financial institution decision maker, consider making checks perhaps a separate purchase for consumers as they become less and less the default. For more findings, check out the full State of Banking report by Drive Research by clicking the link in the caption or the video's description.